Get ready, because the news cycle is moving at light speed, and we've got the absolute latest updates that you cannot afford to miss. From groundbreaking shifts in how communities thrive to seismic tremors in the financial markets, this is the rundown that will keep you ahead of the curve. We're diving deep into stories that are reshaping industries and redefining possibilities. Are you locked in? Because you're about to get the intel everyone will be talking about. First up, we're heading to Zonte, where something incredible is happening on the ground, proving that digital currency isn't just about numbers. It's about transforming lives and rebuilding futures in ways nobody predicted. Then, we're shifting gears to the corporate world, where a major player linked to a familiar name has seen its stock take a dramatic nosedive right out of the gate. We'll break down exactly what happened and why it matters. Next, we're talking about the big picture of regulation and market reaction, as authorities are tightening their grip, causing ripples across the investment landscape, and how this is creating a fascinating divide. And finally, we're stepping into the world of luxury, exploring how digital assets are now making waves in the exclusive realm of high-value real estate. Stick around, because you need to know this. Don't forget to smash that like button, subscribe for all the essential updates, and ring that notification bell so you never miss a beat. Community Rebirth, Bitcoin's social revolution in Zonte. This story reveals how a digital currency is sparking social and economic renewal, proving its power beyond just transactions. The impact of Bitcoin adoption in Zonte is profound, touching multiple dimensions of community life in ways that are both difficult to quantify and astonishing to witness. At its heart, the transformation centers on a fundamental shift in perspective, particularly among the youth. As Mike highlights, it's interesting to highlight how Bitcoin changed the time preference, specifically of young people in Zonte. Time preference, the rate at which individuals value present rewards over future ones, has historically been high in many communities due to economic instability and inflation. This leads to a focus on immediate consumption rather than long-term planning. The constant devaluation of fiat currency by governments encourages this short-sightedness, making saving for the future seem futile. However, Bitcoin, with its inherent scarcity and predictable issuance schedule that halves over time, presents a stark contrast. Its tendency to appreciate offers a powerful incentive for individuals to save, as even small amounts set aside today can yield significant future benefits. This shift encourages investment in education, strengthens interpersonal bonds, and fosters a greater sense of responsibility towards the environment. Mabel's personal experience underscores this change. Growing up in Zonte, she, like many others, lacked access to traditional banking services, relying solely on cash. This made saving incredibly difficult, as cash is easily spent. Bitcoin has provided her with a tangible way to save for the future, fostering a newfound consciousness about financial planning. The narrative extends to addressing deeply ingrained societal issues like unemployment and immigration. Brian points out that Bitcoin has not only changed individuals, but has had a visible positive impact across the community. The pervasive desire to emigrate or turn to crime due to a lack of opportunities is being countered by the new possibilities Bitcoin offers. The Bitcoin Beach Employment Support Program, for instance, has helped individuals involved in illegal activities to redirect their lives towards honorable employment and family stability, thanks to the opportunities Bitcoin provided. Mike further emphasizes that the appreciating nature of Bitcoin has reignited aspirations for education and skill development among young people. They are now seeing high school and college as viable paths, and more importantly, they are motivated to invest in their local community, viewing Zonte not as a place to escape from, but as a place to build a future. The concept of exile, or the feeling of being disconnected from one's homeland due to lack of opportunity, is diminishing. As external interest grew, with people from abroad drawn to Zonte's unique developments, local pride surged. This shift has fostered a strong sense of belonging and community safety, strengthening kinship ties. Previously, opportunities were perceived as exclusive to the wealthy or those in developed nations. However, participation in Bitcoin's global monetary system has opened doors for Salvadorans to engage in remote work, become programmers, and join the global economy without leaving their families. This has instilled immense pride and purpose, particularly in the younger generation. The success of projects like Hope House, which supports children's development, and the broader Bitcoin Beach initiative, has inspired other entrepreneurs globally to replicate this model of human development. The impact, initially localized, has rippled outward, positioning El Zonte and El Salvador as hubs of innovation and opportunity. Audience impact. Community members are reporting a renewed sense of hope and purpose, with young people actively choosing education and local investment over emigration or crime. Analysts note this as a powerful case study for Bitcoin's potential in socioeconomic development. But not all news is about community upliftment. Hold on, because the corporate world is facing its own dramatic shifts. Next, we're diving into market volatility and regulatory pressures that are impacting major players. Corporate crash. Trump-linked Bitcoin stock plummets post-IPO. Shares of American Bitcoin, ABTC, fell below their initial offering price just a day after their Nasdaq debut, signaling a turbulent start for the Trump-linked company. The much-anticipated debut of American Bitcoin, ABTC, on the Nasdaq Stock Exchange took a sharp downturn, with its shares falling below the initial public offering, IPO, price of $6.90, closing at $6.83 on Thursday. This significant drop occurred just one day after the company began trading, marking a turbulent start for the Bitcoin miner. The company, notable for its ownership structure which includes 80% by Hut 8 and a 20% stake held by Donald Trump Jr. and Eric Trump, completed its merger with Griffin Digital Mining, GRYP, to facilitate its public listing. Adding to the day's drama, ABTC filed for an at-the-market equity raise of up to $2.1 billion, intended to bolster its Bitcoin holdings, a move that often signals a company's strategy to capitalize on its initial market reception. The stock did show early promise, surging to a high of $14.65 during morning trading hours, but a dramatic sell-off in the afternoon erased those gains and pushed the price into negative territory relative to its IPO price. The broader market context reveals that ABTC's performance is not an isolated incident. Other major Bitcoin mining companies, such as Marathon Digital, MARA, and Riot Platforms, Riot, also experienced declines on Thursday. This suggests a sector-wide pressure affecting Bitcoin miners, potentially driven by a combination of market sentiment and operational challenges. Bitcoin itself saw a modest 2% dip over the preceding 24 hours, aligning with a general downturn in the cryptocurrency market, while major U.S. stock indexes like the Nasdaq and S&P 500 posted gains. This divergence highlights the specific pressures facing crypto-related equities compared to the broader stock market. American Bitcoin currently holds approximately 2,443 Bitcoins, valued around $269 million at recent market prices. The company's strategy combines Bitcoin mining with a treasury approach focused on holding the digital asset. However, the mining industry itself is characterized by intense competition and razor-thin profit margins. Factors such as high energy costs, which can consume over half of the revenue per mined coin, and the ever-increasing network difficulty due to rising computing power, continuously squeeze profitability. To navigate this challenging landscape, miners must secure low-cost energy, optimize operational efficiency, and increasingly diversify into areas like artificial intelligence computing or data centers. The strategy of stockpiling Bitcoin, as employed by companies like American Bitcoin and Marathon Digital, aims to create a financial buffer against the volatile revenue streams from mining alone, allowing them to benefit from potential price appreciation. Audience impact. Investors are expressing concern over the stock's rapid decline post-IPO, with discussions focusing on the company's valuation, the impact of its equity raise filing, and the broader challenges facing Bitcoin miners. Analysts are divided on whether this is a temporary setback or a sign of deeper issues within the sector. While corporate stocks face headwinds, the regulatory environment is also a major story. Hold on as we break down the latest from the regulators. things are heating up on the regulatory front, impacting digital assets and related companies. Regulatory storm: Bitcoin stocks tumble amid market divide. Heightened U.S. regulatory scrutiny is causing Bitcoin-related stocks to drop, even as the cryptocurrency itself shows resilience and new avenues for trading emerge. U.S. regulators are intensifying their oversight of the cryptocurrency sector, leading to a significant downturn in Bitcoin-related stocks. American Bitcoin Company, ABTC, a prominent example, saw its value plummet by approximately 17% in recent trading sessions. This sharp decline is directly linked to increased scrutiny from the Nasdaq and other U.S. regulatory bodies, which are actively examining cryptocurrency operations to ensure compliance and market stability. This heightened regulatory posture signals a broader trend of increased oversight as digital assets become more integrated into the global financial system. In contrast to the struggles of related equities, Bitcoin BTC itself has demonstrated remarkable resilience. The cryptocurrency experienced a 1.5% rise within a 24-hour period, briefly surpassing the $111,000 mark and breaking a 2-week downtrend. This performance indicates a broader recovery and momentum within the crypto market, with Bitcoin leading the charge. However, this digital asset strength has not translated to its publicly traded counterparts, particularly those heavily invested in Bitcoin reserves, which are facing additional downward pressure. The market divergence is further illustrated by the performance of other major cryptocurrencies. Ethereum, ETH, remained relatively stable, while altcoins like Solana, Sol, and XRP posted more significant gains. Despite this varied performance among digital assets, Bitcoin continues to be the dominant force in the crypto market. The recent joint statement from the U.S. Securities and Exchange Commission, SEC, and the Commodity Futures Trading Commission, CFTC, has been a pivotal development. This announcement paved the way for registered exchanges to offer spot cryptocurrency products, a move celebrated as a significant step toward mainstream adoption. Yet, this progress comes with increased scrutiny, particularly for firms that hold substantial digital asset reserves. Amidst these evolving regulatory landscapes, institutional interest is also shifting. The Winklevoss-backed firm, Treasury, has announced plans for an IPO in Amsterdam via a reverse takeover. This strategic move highlights Europe's growing appetite for Bitcoin investment opportunities, especially as regulatory uncertainty persists in the U.S. market. These developments underscore the complex interplay between regulatory actions, market sentiment, and the performance of both digital assets and the companies associated with them. While cryptocurrencies historically offer high returns, as evidenced by Bitcoin's average annualized return of approximately 54% from 2014 to 2024, they are also characterized by significant volatility. Bitcoin's price fluctuations are notably more pronounced than those of traditional equities like the S&P 500. Consequently, investors must carefully navigate this environment, understanding that metrics like compound annual growth rate, CAGR, are crucial for assessing long-term potential amidst inherent risks. The current market climate demands a nuanced approach, balancing the opportunities presented by digital assets with the realities of an increasingly regulated financial ecosystem. Audience impact: investors are closely monitoring regulatory pronouncements, with significant debate surrounding the long-term impact on crypto-related stocks versus digital assets themselves. There's a growing sentiment that European markets might offer a more favorable climate for crypto firms seeking public listings. Now that we've covered the market's regulatory challenges, let's shift gears to a different kind of asset class being transformed. Prepare to explore how digital innovation is entering the world of luxury and high-value transactions. Digital deals: Bitcoin enters high-value real estate market. Bitcoin is breaking new ground, facilitating transactions in the exclusive world of high-value real estate, heralding a new era for digital asset-backed deals. The integration of Bitcoin into high-value real estate transactions represents a significant evolution in how digital assets are perceived and utilized within traditional markets. This trend signifies a growing acceptance of Bitcoin not just as an investment vehicle, but as a practical medium of exchange for substantial assets. The ability to conduct transactions using Bitcoin can streamline the buying and selling process, potentially reducing fees, speeding up settlement times, and opening up the market to a wider pool of international buyers and sellers who prefer or are equipped to use digital currencies. This is particularly relevant in the luxury real estate sector, where cross-border transactions are common and privacy, speed, and efficiency are highly valued by an affluent clientele. Several factors are contributing to this shift. Firstly, the increasing maturity and stability of the Bitcoin market, coupled with greater regulatory clarity in some jurisdictions, are building confidence among traditional players. Secondly, the rising net worth of individuals holding significant amounts of Bitcoin means there is a substantial amount of capital seeking avenues for deployment, and tangible assets like prime real estate are a natural fit. Developers and real estate agencies are increasingly recognizing the demand and are adapting their business models to accommodate Bitcoin payments. This can involve direct acceptance of Bitcoin or working with specialized third-party services that convert Bitcoin to fiat currency instantaneously, mitigating volatility risks for the seller. The process typically involves robust due diligence to ensure the legitimacy of the digital funds and compliance with anti-money laundering regulations, similar to any high-value transaction. Moreover, the use of Bitcoin in real estate transactions can offer unique advantages. For buyers, it can provide a way to leverage their digital asset holdings without liquidating them into fiat currency, thus potentially avoiding capital gains taxes in certain regions or preserving their investment exposure. For sellers, accepting Bitcoin can attract a niche but growing market segment and potentially lead to faster deal closures. The underlying blockchain technology also offers potential for enhanced transparency and security in transaction records, although this aspect is still evolving in the context of real estate. As this trend gains momentum, it is likely to influence broader market dynamics. It could spur innovation in real estate financing, potentially leading to new forms of digital asset-backed mortgages or investment funds. The adoption by high-net-worth individuals and luxury developers also lends credibility to Bitcoin's utility beyond speculative trading, positioning it as a viable asset for wealth preservation and transfer. The challenges remain, primarily related to price volatility, regulatory inconsistencies across different regions, and the technical expertise required for secure handling of digital assets. However, the trajectory suggests a growing synergy between the digital asset economy and the traditional world of bricks and mortar. Audience impact. Real estate professionals and high-net-worth individuals are showing increased interest, with discussions focusing on the practicalities, risks, and rewards of Bitcoin-denominated property transactions. The trend is seen as a significant indicator of Bitcoin's growing utility in the mainstream economy. That wraps up our deep dives for today, but we're not done yet. Stick around for a quick recap and your full call to action. And that's a wrap on today's essential updates. We saw how Bitcoin is sparking social renewal in Zonte, while a Trump-linked Bitcoin stock took a major hit right after its IPO. We also covered how regulators are impacting crypto stocks, even as Bitcoin shows strength, and explored the exciting new frontier of Bitcoin in high-value real estate. You've got the intel. Now make sure you're subscribed. Hit that like button, subscribe to Bitcoin Bulletin for all your crucial crypto news, ring that notification bell so you never miss an update, drop a comment below with your thoughts, and follow us on all social platforms to stay connected.